Good day, everyone. Well, we got the news that the ECB, as expected, is going to be printing more than they have, so they're stepping up their QE program. Markets sold off on the news, and now they're rallying. They're trying to push through their respective 50-day moving averages. But the reality of European QE is that it really can't rally the markets. I mean, if you look at the European markets, they're 15% off their peaks. The UK is 20% off its peak. The U.S. markets have been the tallest standing midget, but they've been showing a lot of topping action as of late, a lot of choppy, go-nowhere action that creates riptides that makes it very difficult to predict market direction. But that said, we are seeing a serious lack of leadership in this market. The stuff that is moving tends to be the junk off their bottoms. And the other thing about the European QE, well, where's that money going to go? I think most of it's going to be used towards paying, propping up the debt of the weak EU members like Greece and Spain. So I guess the idea is that, well, maybe there'll be some money left over, and that'll find its way into the tallest standing midget called the U.S. market. But that's pretty doubtful, it seems. I think that we have a very strong dollar as a result of being taller than everyone else, and so that bodes well, strong dollar. But where's the economy? There's too many signs that the economy is really not recovering, and this is true globally. Globally, we're talking a possible another recession, third recession in Europe since 2009. We're also talking about China, who's had the fastest pace of growth, but relative to what they had, they've been slowing down. And generally speaking, if you go back, you can go back 200 years, everything's even connected back then, so that when one major nation would slow down, so would the others. And so for the whole world to be on a slowdown here, which it clearly is, and for the U.S. to actually buck that trend is a pipe dream. It's never happened before, and I don't think it'll happen this time. So we're going to see potentially as these other markets get dragged down lower, because you can look at the European bourses and see that they're all in downtrends since June of last year. Same with the UK market. When you see that kind of action, I think it's only a matter of time before the U.S. starts to get dragged down with the rest. So the market, the MDM is sitting on a sell signal at this point. It does recognize that we are in a riptide environment, so there is going to be some volatility, and it is not going to be it can't be slow in this kind of environment. So in other words, if it is wrong here and the market wants to go ahead and rally for several days, it's not going to sit on its sell signal. But based on how everything looks right now, it looks more probable that the market is going to head lower before it really does have a several day rally where it moves to new highs. Gil?
Yeah, I think actually the sell signal will prove.
I can't hear you.
Sorry, got to turn on my mic there. I think the sell signal will prove out. Right now, the way this market is, the way I look at it, it's like if you don't like what the market's doing right now, just wait 20 minutes and it'll change for you. You're basically seeing right now a lot of the leading stocks, the best stocks. So in other words, if you look at Ambarella, well, it's down today slightly. It's holding the 10-day line. Maybe it's setting up for a pocket pivot. That's one I like, and they don't announce earnings till later in February, so I'm staying focused on names, both long and short, that don't announce until later on next month, unless I think I'm going to be able to whip them for a quick trade here. And in most cases, that's either buying on pullbacks or shorting into rallies. But you see, Taser's acting okay. You have the pocket pivots hanging in tight just above the 10-day line. I like this name. I think it has potential to go higher if we get into a new bull market, which I think is questionable. Dr. Kane and I have been discussing this whole ECB thing, and the reality is that they're going to have to buy the debt of the irresponsible countries, and so all they're doing is pumping. They're just doing the same thing, and it's not solving any real problems, which is insolvency, and I think it's all going to come crashing down at some point. When that happens, when things start to decouple, well, that's another question altogether. But gold is trying to go higher here. It's moving up, and you had this move above the 200-day moving average. We get people emailing us, what is your view on this? What is your view on this stock? What's your view on gold? just so you guys know, we don't provide personal investment advice. If we have something to say about anything in the markets, we'll issue a report or we'll talk about it on the webinars. But we even have some guy sending us a spreadsheet of all his trades, and he wants us to go through them and evaluate whether he's trading correctly or not. It's like, yeah, if you want me to coach you, you're going to have to pay me $100,000 a month for me to do that, because it just ain't worth my time otherwise. So just keep that in mind. If we see something we think is potentially actionable or a proper setup, then we'll put a report out on it. We won't be shy about it. But the bottom line here is when you look at the GLD, and I'm going to bring up, let's see here. Let's pull up this chart. I'm not sure what this is happening here, but if you look at this, long term, we're going to go to a long-term chart here. You've got, you're here, okay, and you've had this gap up, but it's coming out of this position, so it's not a viable gap up, and it's not really a pocket pivot because you're extended at that point anyways. So you really can't say that, yes, this is a buy point, you buy it and you're going to make money. You could have, on the basis of it coming above the 200-day moving average and then using the 200-day moving average as your stop, okay, and that would have worked so far. I took a position in it, and so far it's starting to move up a little bit, but nothing terribly exciting. But the real question is whether we're getting into a longer-term move in gold. Here's the weekly chart that's going to take you all the way back to the highs. But you got a long ways to go, and you haven't even broken this. If you draw a line across these tops, you haven't even gotten above this downward trend line yet. So technically on that basis, I would say that gold is really just in a downward trend channel. But with all this printing going on, it's starting to look very likely that we may see gold move significantly higher over the next few months. So meanwhile, I think the Fed is stuck not being in a position where they can't really raise interest rates, and they're kind of just stuck between a rock and a hard place. So anyways, I'm starting to get some 620 signals on the short side. I'm not afraid to test the short side, and this morning I hit the opening pretty aggressively very quickly, and then everything came down hard, and then I set my trailing stops on the 620s or on MACD stretches. You got a bunch of MACD stretches very quickly, and so you take some profits, but it's nothing really major. So it's really hard to make progress in this market, primarily because it's so damn volatile. If you look at the Nasdaq chart here, let's see. Let's pull up another chart. Go to the Nasdaq here. And here I want to go to all market indexes and come down to Nasdaq composite here. There's all sorts of Nasdaq index charts. And you can see you got this sort of dragonfly doji right here. And so you moved up, you stalled yesterday. That's a big stalling day. Now today you got this sort of hammer. But a hammer can be like this, and after a rally, it's sort of it turns into a hanging man after a rally, and so this could be, depending on where we close, this could be a bearish formation short term, and you're right at the 50-day moving average, which is this moving average here. But the bottom line is you're just in a big, choppy, sloppy range, and so if you're trying to play some sort of a trend, it becomes problematic, I think, and you're just getting whipped around. And we saw yesterday how everything just kind of flew back and forth, and so not really going anywhere. Anyways, you're down 119 on the Dow right off the opening, and then you flip around and you're up 83, and then you're back down 30, and looking like you're going to roll over, and then you rally back to close up 39. And this is a very difficult environment to play in. And if you were shorting earlier in the year, you probably had a good couple of weeks. I know I did. And then I noticed on the chat room somebody's getting all giddy about how much money they're making to start off the year and blah, blah, blah. And I don't know. To most people, I think on the chat room, they think they're making a lot of money if they're up 10%. To me, that's just a normal sort of range fluctuation. So when you see people or hear people starting to get giddy like that, then to me that's a sign that it's probably going to not be so easy here on the short side. And sure enough, it hasn't been, as the market has pretty much just plowed higher over the last 4 days, and it's trying to do it again as we grind higher. I know that the ECB can buy futures on the Chicago Merc, the CME, and they may very well be doing that because they can, hammer. I guess they don't want to see the U.S. markets reverse today, because that probably would not be a good thing to see for their new QE drunken QE IV. Anyways, so that's kind of where we're at in terms of the overall market. But what I'm seeing is you look at workday. This is one of my favorite short sale targets, coming right to the 20-day. So it's pretty much retraced half of this move down. But again, it shows how you cannot react on the short side. You have to anticipate. So shorting it up here last week was beautiful because you got a nice break. It undercuts these lows. You cover it. Now you let it rally. So I tested a little yesterday. Didn't really go anywhere. I covered it. And now I'm looking at it again. Just put out position in it here at around 81.82 on the MACD stretch. Let's take a look at that. So what you do is you actually have the MACD stretch here, and then after you get the stretch, the MACD line rolls over, and so that becomes a spot where you can try and hit it, and it got it, right there, pretty much right at the peak, and we'll see what happens now. It may just come down to the 20 line and find support. Very very tricky, but I think you got to be stay opportunistic and short into rallies. And if they don't, if you short something and you feel like it's not really getting any traction on the downside, or you see it start to break and it turns and rallies, you should probably just step out of the way because you might get run over. So I think that's really the trick here. You don't want to take any big losses on the short side because the market can grind you up pretty good. Let's see. Other short sale targets. Here's Under Armour, noticing also it's rallying up towards the 50-day. This is actually, if you look at it here on a weekly chart, it's sort of a sloppy looking cup with handle. You've already violated and broken down through the 50-day. So that's pretty typical on a late stage base failure. You rally above, you try to rally to new highs and break out, and then you break down through the 50-day or the 10-week, find support near the 40-week line, and now you're bouncing back up to the 10-week line / 50-day. The high there would be on the 50-day would be 68.33. So you're getting close, and right about in here is where you can start watching it on the 620 and see what happens here. You can see here you also have a MACD stretch, and you have crossed after the MACD stretch. So the idea here is first the MACD stretch, then you get the cross. But remember, that's no real guarantee of success, but it does give you at least a reference point. If you shorted on that, so if you get in short, I just put some shares out here at 67.92 or something like that. I don't know, 67.82. Yeah, okay. And it comes down in here. It starts to come over that roll over, and the MACD crosses here. So right about in here, there's your spot to come after it and put out a position and see what happens. It might break. The other thing is you can just wait for the 620. But the way this market is so volatile, that could be too late. So you kind of have to take that into account too, because the market's very volatile, and the only way you're really going to be able to get in right on the short side is if you're anticipating the rally rather than reacting to a market break. So you have to be careful about that, I think. I'm going to answer some questions. So, how would you describe current market based on the window of opportunity? Is it closed or narrowly open? I think that's I know we talk about the window of opportunity, but the idea that you can gauge how far it's open, that's a bunch of baloney. So again, you want to rely on a heuristic, a rule of thumb. Yes, window wide open, window partially open, window closed. That's a bunch of BS, okay? And if you think you're going to invest or make decisions about stocks in real time based on some rule of thumb about how big the window of opportunity is, you're just not really thinking straight and getting too fixated again on this idea of trying to apply a label. And I should mention a very good book that I'm reading. Is a copy was sent to me to review. It's called Trade Mindfully by Gary Dayton, who's actually a psychologist and a trader. And he actually, in the first couple of chapters, he goes into a detailed analysis of how the use of heuristics leads to trading errors. In other words, the idea that you're going to apply these very simplistic and simple-minded rules without really engaging your deliberative mind, in other words, thinking, and using common sense, then you're probably going to make a lot of trading errors. And a lot of investors do exactly that because they want to apply these simple rules. Well, is the market is the window wide open? Is the window closed? And then what does that tell you about any particular stock? It tells you nothing. And I think you just need to get away from that stuff, okay? Because they ain't helping you. And what if I said, oh, yes, the window's wide open. What are you going to do? Just pile in and start buying everything willy-nilly? Someone says, I think your views on stocks and market overviews are excellent and have greatly helped me understand the marketplace. Now the goal is to translate that knowledge into profitable trades. I'm curious. Oh, wait, no, that's a different question. Oh, well, I want to, first of all, thanks for the kind feedback, and we paid that person to say that. Let's see. Someone else says, I'm curious to find out whether Dr. K's MDM was applied to Swiss market. The quick answer to that is no. And whether MDM safely moved to cash before S&B decision. And the answer would be not applicable because the MDM does not apply to the Swiss market. How does the MDM handle black swan events like that? You want to expound on that or expand on that, Dr. K?
Yeah, sure. Well, black swan events so far, of course they're rare by their very nature. We had one with the flash crash in 2010. This whole thing is that black swan events don't just generally, I know people want to think they just come out of thin air, but in my experience, there's always some sort of indication in terms of price volume action before the event actually occurs, and that's how the model went to sell signal, so it could profit handsomely from the flash crash in 2010. It's done it before, that's just the way of the model. It did it in 1998. It senses something that's not normal, and it goes to either cash or a sell. In terms of the market collapsing, in the very rare times it has been on its sell signal, so it profits handsomely during those periods. And so anyway, all that's to be said that you can't predict when a black swan's going to happen. In fact, many times the model will go to a sell, and then of course there's no black swan. But what's important to know is that it has been on a sell signal before the black swan event. And I'd also add that with stocks, when they gap down, now we're in a more treacherous environment the last few years, I would say, but prior to that, if you look at decades of market history and actual real-time trading, I've done in my own accounts, I've only been caught in a stock that gapped down hugely overnight once. And I had a small position because it was speculative. Therefore, I knew the risks. And so, okay, so gap down, lost basically, a third of its value overnight. Fine, no big deal. My position size was not substantial. But the markets will give you indication. If you study stocks that have gapped down throughout the 80s, 90s, and then in the 2000s, you will see that there's some sort of warning signal in the terms of price volume action before the gap down actually occurs. That is also part of the risk in buying stuff that's cheap or lower quality, that you might buy it and then the thing could gap down on you the next day, and the warning signs are all there. So yeah, I generally, that's another reason why I prefer to buy quality rather than trying to catch stuff off the bottom. But it is a viable technique if you're sitting in the position just for a few days for a swing trade.
And I'm assuming I was correct in pointing out that the model, you don't use the model in the Swiss market.
The model is not used in the Swiss market, but I know some people do try to use the model for timing other markets, and there can be some correlation since markets do correlate to some extent, but it's not something I use it for.
Somebody asks that they bought a copy of your book In the Trading Cockpit with the O'Neill Disciples. I really like the exercise part in trading simulation. I would like to do more similar exercises. Any advice? Well, you can just test yourself, go through a chart. You can use, for example, you could use HGSI and just go through, looking at things and see like this, where you kind of go one day at a time and you click here, go one day at a time, and you see a pocket pivot. And if you think you're identifying it correctly, you actually get a blue bar showing up in here. This actually isn't that accurate. It will show you most pocket pivots, but it will miss a lot, and it'll also show you a lot of false ones. So it just proves that you can't necessarily apply an indicator to something and just come up with a pocket pivot and bingo, it works. You have to employ a lot of contextual analysis in terms of understanding whether something's a leading stock. But that's one way to do it. But I don't know of any other books where you're going to find exercises about pocket pivots. So we don't have a correction sheet that I can download. I think what do we do with the errors? We submit them to Wiley, and then they're going to supposedly put out a new edition and correct it when that happens. So anyways, let's see. What other questions? Somebody's asking about Grub. Let's take a look at it here. Grub they come out with earnings today after the close, so it'll be interesting to see what actually happens there. But I don't really care much for the way it's acting here. It's just drifting lower, lower. The volume is light, and nobody really wants to step up. And I'm going to clean this up, actually. Let's go with, there we go. Nobody wants to step up in here and take any shares. The stock's up a penny right now at 35.54. It was a little higher earlier when this updated. We can update it again and take a look at it here, but no, I'm not going to do that just yet. How are you comparing real-time intraday volume in the stock to yesterday's volume? Well, we use Wanda, which shows it, but also I can just look at it this way. Intraday percent volume change. I can look at my buy list, or I can look at all securities here, and it will show me what the intraday percent volume rate is right now. So this is a great tool for people who want to do this and don't want to pay a lot of money for other systems, you know. And we'll get people whining about yo, don't criticize O'Neill stuff, but I think it's really expensive, and they could really work to make things more accessible to people rather than just trying to pinch everybody for as much as they can. Because if you go on the internet, there's so much out there that you can get for free and for a low cost, and it's pretty much commoditized. And I think O'Neill still suffers from this idea that their stuff is special and nobody else has it, which is not true. And so this is a good resource, and that's one way to do it. That's $600 a year, and you can see this and see what's really moving on big volume. And then you can put filters on it. So if I don't want to look at stocks that are less than an ERG with 180, which is roughly comparable to the composite, then I can put this filter over and only get the best stocks in here, because you'll see if the ERG is go to the top here. You see there is no stock here with an ERG over 180. So this is one way to do it, and that's how you can compare it. Any thoughts on BABA as it pushed a bit past 10-day and 20-day? Sell at 50. Well, again, you're asking us to tell you what to do on a trade, and unless you figured out what you're doing with the trade beforehand, then you really shouldn't be trading. It's up above the 65-day. There's no buy points in here, so but sell. Yeah, how do we know? We don't know. I really don't like those questions. I think it just represents or indicates someone who's really weak-minded, and they need to ask somebody what to do, and they need to get better at trading and improve their skills rather than relying on other people to tell them what to do. That's just a terrible, terrible weakness that needs to be erased from your head. And if it's a tendency, should I sell it here? You're an idiot if you're having to ask other people. So don't do that. VA. Let's take a look at VA. May pocket pivot today. Earnings come out, I think, in the next few days. So I'm not clear to me that you're necessarily going to be able to buy this here. If you're going to buy, you got to buy it on weakness on the pullback, and the volume's drying up in here, and there's no buy point here. It might flash a pocket pivot, but it will be in a V-shaped position. You got earnings coming up. What's really pushing stocks today is Southwest Airlines came out with their earnings, and they were good because low fuel prices are helping them out a great deal. So you see the stock gapping up. The volume's pretty heavy right now. It's probably one of the bigger ones. If we look at this, I'll bet you it's on. Here it is right here. Volume is 342.5% above the 50-day moving average of volume for this time of the day. So is that a viable gap up, Dr. K?
Let me see here.
I think you could call it one, but it's in an airline. So the low here is 43.34. It's closing at 44, or it's right at 44.74 right now, I believe. Let's see. 44.63.
You got it's a strongly ranked industry group, ranked number 2. Because oil is so cheap, and it's been in a nice uptrend trajectory, although it did violate the 50-day a couple times. But it is an airline stock, so it's kind of
yeah. So it may, last time it had a big gap up here in late November, and it didn't go anywhere. So it's an airline, so it tends to be a little slower. So not really the sort of thing that gets me excited. I don't consider this to be a target-rich environment based on what's coming through my screens. There's very little that is setting up properly. There's a lot of stuff coming off the lows, and in fact, that's what's happening today mostly. Anyways, somebody asks, pocket pivot volume requires it to be higher than any of the prior 10 days. Yes, I know the rule. How about a down day closing the upper half of its range, which is considered as supporting action? Is this relevant or non-relevant to pocket pivot identification? You want to answer that one, Dr. K?
Yeah, if in the last 10 days you have a down day, and of course it has to be a down day that qualifies. So if you have a down day over the last 10 days with very high volume, but it closes near the top of its range, so in other words, say it's only off a very small amount in context with the chart, then you would say that is supporting action, and that would not be considered a down day. So in other words, the pocket pivot would stand even if the volume on that present day was lower than the volume on that prior day where it closed it closed only off a fraction.
Yeah. So
but keep in mind, it's always contextual to the chart. So using hard and fast numbers is not the best thing to do. You have to keep in context with the chart, the volatility of the chart. And so if you develop your chart eye, you can see, okay, well, that's clearly a supporting action day. Therefore, that high volume, say it was down 0.1%. That high volume down day isn't really a down day, and you don't count that when you're going back to the last 10 days.
Right. I don't know. Here's a question that I think is way too much thinking. Nasdaq is working on a third bounce since 11/28/14. I noticed that the last down wave from 1.9 to 1.15. So let's just take a look at what, the 1.9 to, so this last down wave, it had a bit less volume than the one before it. The current move up is in less volume, but could that have been some, you're trying to make some sort of a blanket prediction on the market based on some sort of idea that you can tell what's going on with the volume. I think you're in a very distorted, QE manipulated sort of environment, and I think that I really wouldn't get bogged down on any of this. It all comes down to what the stocks are doing, and if the stocks aren't setting up for you, or there's nothing that's really acting well. In fact, I'm looking at some of these names I like. Taser turning red. Don't own it, but oh, lovely. Whoops, here we go. Turning red here, not really going anywhere. So everything kind of slow. I don't really get into that. That's not really what I look at in Wyckoff, into this idea of effort and result. And, so the indexes are going sideways, but there's volume here, and it's pretty decent. You have a little bit lighter volume in the rally. Is that telling you anything? I don't know. I tend to think the market in general is pretty sloppy, and if you try to get too cute with it, you're going to probably get into trouble. And it probably doesn't pay to be too aggressive either right now. Save is a laggard in the airline space. You're kidding. Yeah, it is. So what does that mean? I don't know. I'm not a buyer. Somebody says thanks on the Wyckoff question. Maybe studying too much. It's a possibility. You can't study too much, I guess. Or yeah, it's like another question. Somebody wants to know if there's any special IPO pattern that we found that you can short on. I'm not sure what that means. Like when something comes public, you can short. I don't know. You can short this or something. I don't know. A lot of times you can't even borrow it, so not really that relevant to my process at least. I'm noticing Workday kind of rolling over a little bit here. I do have a position out on that. Just kind of not really heavy here. Just kind of testing it out. You see it's starting to come down a little bit. So we're heading for the 20 period. We'll see what happens when it gets there. Maybe you get a 620 sell. And I'd watch a lot of these things that are rallying. What are some other ones? Green Mountain's another one that I'm watching. Kind of a head and shoulders, sort of a fractal head and shoulder. You can sort of see it on the weekly chart as well. So you get a rally this morning. That was shortable. and it looks like it's rolling over again. They announce earnings like any day now. When do they announce earnings, Dr. K? Do you know?
Not off the top of my head.
Looks like the first week of February, so maybe it can blow apart before then. But that to me is a head and shoulders sort of formation. I think you got to keep an eye on that. It's definitely on my short sale watch list. Let's go through some others here. Data is interesting because this was the breakout attempt and it failed. So notice in this case how you go down to the 50-day on the breakout failure. So you fall back below the breakout point. There's also another reason why you don't want to buy breakouts. And you find some support at the 50-day line, which is a thick blue line. And then you rally above the 20-day. And then when you come down below the 20-day, that's probably a short zone right in here. And now you've bounced up into the 20-day. You're trying to rally today. This may be shortable in here. Not looking so hot. Somebody says, looks like LE found the Land's End and went, oh, we have a comedian. Yeah, that's a big ugly gap down. They came public and, see, here's the thing with IPOs. There's no magic IPO short sale pattern, okay? And there's no need for one. If an IPO has a big move, that's going to be the impetus for a big break. You know, not just the idea that somehow in here there's some pattern that you can short. You know, let's say if you thought this was a bear flag and you shorted it here, well, it doesn't work. What you do is you just wait for the thing to set up and form a topping formation. In this case, you might be looking at the right side of the head and the head and shoulders. Maybe it bounces off the 200-day, but that's pretty pukey. Somebody says, I know you do not use a certain percentage above 10-day, 50-day moving average to determine whether a pocket pivot is extended. Is the call more towards the art/experience and contextual? What? I guess what do you talk? Something about that it's being extended above. Well, let's take a look at Taser. Dr. K, I got to do something real quick. Can you cover this? You have a pocket pivot through the 10-day at 26.14. At what point does that become extended? You want to go through that real quick? I'll be right back.
Sure. Okay, so you want to know the market action, the stock action in terms of when this will be becoming extended. Now, it all depends on your risk tolerance levels. Of course, there is the chart context, but knowing that, it doesn't mean that the stock is still within your risk tolerance levels. If the stock is very volatile, then you're best off just staying away from the stock entirely. On the other hand, if you're more of a risk taker, then you're going to be looking at what would be considered a higher price that would be tolerable to your investment style. And that also goes, of course, into position sizing and whatnot, because sometimes you might want to sometimes you might say, okay, this is a little bit extended compared to what I would normally permit in my trading, so maybe you take only a half-size position just to try it out because you don't want to be left behind on this one. As far as just looking at the overall chart, it's been sideways in a very short basing pattern here. So I would just use the context of the chart, develop your chart eye as best you can so you can understand that the stock inherits a certain volatility and therefore certain, at some point, it would be traditionally too extended.
Very good. Let's see. Let's go through some more stuff here. Twitter. What I want to do here is the title bar up here. I'm going to turn this green. Twitter, they come out with earnings, I think, first week of February, I believe. So the stock's bouncing around here. It's kind of down there, so it's in a position where it can chop around a little bit. I don't think anything happens before earnings, so it's not like I'd be shorting it here or even buying it. You could have hit it here, for a quick trade, but I think a lot of these stocks going into earnings, it's a little bit tricky. Because you're either looking for a quick break that you can trade very quickly, because I wouldn't hold anything into earnings, because if you try to do that with Netflix, you got your head handed to you, and that is a gap above the 200-day. My thing is you probably have a shot at getting up to this gap, the top of this gap here, which is around 430, and that looks reasonable. So I'm thinking that it was good for a trade. You could have bought on a pullback yesterday, and as long as it holds a 200-day moving average, you're good. We have a pretty good crowd today. Seems like we're getting bigger and bigger crowds all the time. That's a good sign. I think most people, though, want to watch the video because they don't have time during the day. A lot of people do have real jobs. Hopefully I never ever have to get a real job anymore, but we'll see. Anyways, what else? Let's go through some more of these. I've been watching Google, and you're getting a rally here. Let's see, that's not right. You're getting a rally here up to the 50-day, and you look at this pattern. It looks like a big rolling top. You had a failed base here, and then again, see how when you break down, you find support along the, in this case, because Google's a big stock, it found support along the 40-week line several times. And then it finally breaks down, rallies back up to the line. You get a black cross here where the 10-week line drops below the 40-week line, and then you're breaking down. You're following the 10-week line down. So I'm watching this. I'm wondering if this becomes shortable in here as it rallies. They come out with earnings next week, so again, that's problematic. But I'm just kind of watching this because I'm seeing a lot of these big stock leaders that have previously been doing very well, and they're sort of coming apart here, or they have been coming apart for some time. We looked at data again. Let's go back because this might be in a shortable position here. You have a quick stop at the 50-day line. Fleet is another one. You can sort of see a fractal head and shoulders in here, and you can see on this break you broke down and rallied into the 20-day moving average. That's a thick green line here, and now you're following the 10-day to the downside. You found some support down here at the 200-day, and now you're bouncing. But that's another one that could be topping here after a pretty big move. And you'll notice another thing. This is when FleetCor Technologies had its big move. And then it starts to slow down, and it's not making so much progress. A little bit like Tesla, because Tesla did the same thing, had a big move, and then it starts to slow down, and then it starts to roll over. And you'll see these stocks do this. They'll be acting very strongly at first, so you got to be early on the move. And then they have these breakouts, and they go nowhere. Fleet's like that. You see Tesla the same way. It's up to the 10-day moving average. Earnings coming out, I think, at the first week of February. So this, you could try and short it here, I guess. I'm not playing this anymore, probably until after earnings. And it has continued lower. The gap down here is probably too late to short because it's more of an exhaustion gap than it is a gap down sort of break off the peak. Like this one was more shortable because you're coming in after a rally, whereas this one is a gap down after a prior downside move. And the place to short this is actually up here. So, the idea that you're going to come in and hit it here, it's probably a little late. It formed a little bear flag, but it hasn't gone anywhere, and now it's moving back up to the top of the gap. So I think it's a little late. I'd probably look at shorting it up here. But again, earnings are coming out soon, and I'm not so sure I want to necessarily be messing around with it. Let's see. We looked at Workday. Workday's starting to come in now. I think this is very shortable right here. At the 20-day, you can use a high today as a quick stop, probably. Somebody mentioned V in the chat room, and I think this is interesting because V's, it's had a long run. You had a recent gap-up breakout here. It's sort of rolling now, and you're getting a little fractal head and shoulders here. As it punches into the 50-day line, it might be shortable there. Let's see. Someone's asking about Expedia. I notice all the travel names look like they're breaking down. Expedia into the 20-day. There's another one. TripAdvisor. I actually shorted this one here. You cover the undercut. See, you get an undercut here. You cover. Now it's drifting higher. Not sure where it's going from here, but it doesn't look all that strong in general. You can see the big top, sort of a big cup formation. Sort of a mini pot, I guess you could call that. Straight down, straight back up. You see that? How it's very quick. And then you break down through the 50-day line. You bounce off the 40-week, and you rally up to the 10-week, rather, which corresponds to the 50-day on the daily. And now you break down. You get another rally into the 10-week here, and you recently rallied into the 10-week again here. And you're breaking down from there, but you're down along these lows. So they come out with earnings, I think, next week. Not clear where it's going from here, but if you think you can get away with a quick short on any of these, Expedia, Trip. I know Orbitz, there was some talk of them being bought out, or they're putting themselves up for sale or something like that. And so that whole group has been in trouble. Priceline, of course, the big stock leader, and you see here sort of an improper cup with handle. It fails, and this one just blows right through the 40-week line. Then you get a rally back up to the 40-week line, and it breaks down from there. But you can kind of see how these work pretty clearly in terms of the breakdown and determining your short sale points. Doesn't mean they're going to work right away when they rally up into a moving average. In this case, Priceline did right here back in, that would be early November. So that would have been a great short spot, and then you gap down. I think maybe earnings were coming out at that time. But then you have this rally just past the 50-day, and it rolls over again. And maybe you get some resistance here rather than at the 20-day, and you're going to head lower from here. I think a lot of this depends on what the general market does from here, but it would not surprise me to see the market roll over. Like I said, Dr. K, I think your sell signal is probably going to be right. And the reason I say that is because I'm not seeing what I normally would see when the market's trying to come off a low, which is a lot. You see a lot of roundabout and bottom fishing pocket pivots, and I'm just not seeing that right now. So it's not, there's no targets on the long side that I feel very confident about, especially going into earnings. The things I'm focusing on are Ambarella and Taser and Palo Alto Networks, which is down today, and I think Taser is as well, and now Ambarella is down $1. 58.11, and so there's just no traction there, and I'm not seeing any of these names on a widespread basis. What you're mostly seeing are a lot of broken patterns where you're getting these jacks to the upside as the market's engaging in these rallies here and here and here. And so to me, I don't try and study the index action and get fixated on effort and I don't know, whatever the other stuff you're talking about there, Gar. I don't get fixated on it. I look at the contextual factors in terms of what are the stocks doing within the context of what the market's doing. And as the market's chopping back and forth, you're seeing a lot of names break down. And you're seeing a lack of really viable buy points in stocks that really work out. For example, I get a lot of questions about this one. NXPI, and yeah, you get a breakout, but that's breakout's failing. You get what's another one? SWKS, Skyworks Solution. That's trying to break out, but again, it tried to break out here and it just kind of limps back in, not going anywhere. Another one I liked that looks good is Freescale. I bought this a couple days ago on the little pullback, and then it jacked yesterday above 27. That seemed like a good sell point, and as it turned out, it was. And from there, the stock just kind of drifts back in. And right now, the stock's down about 56 cents at 26.34. So you could have bought it back, I guess, this morning or perhaps. But it's neither here nor there. You follow what I'm saying? It's just not happening. And you're not getting these setups that I would normally see. And that's why I'm very cautious about this market right here, right now. So you can play that song if you want to. You want to sing that for us, Dr. K? Anybody have any questions about specific short sale target stocks that maybe we've discussed previously? Splunk, hanging along the 200-day. You see a fractal head and shoulders. This thing looks like it wants to go lower. And they don't come out with earnings until later on in February, I believe. Is that right, Dr. K? Yeah, 227. This thing looks like it's ready to go lower here. Let's see.
Not looking good.
No.
Had a great story.
Yeah, ARM Holdings.
Saying otherwise.
ARM Holdings looked like it was in a fractal head and shoulders here. You see the overall pattern, though, is still weak, so you may be looking at a short sale point as it rallies up here. It's very V-shaped here. There's some buy recommendations. I tried testing this out on the Gap a couple days ago on Tuesday, and stopped me out pretty quickly. There's nothing really happening here. And you can feel it. You can feel that there's no real traction there on the short side. I think I was on the chat room and someone wanted to short, and I said, well, I'm watching this trade in real time. It looks like there's an algo that's just going ping, 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 and just buying it. And I'd rather wait until I have some evidence that maybe the persistent buying is over with. And they just drove the thing higher, and you push it over 48 yesterday. And so, you got to be careful of that. When you're trying to come after stocks in the short side. Keep your stops tight. And if you're getting a sense that, like I said, if you're not getting any traction on the position, just go away or cut the position down and make it smaller or whatever. But I like to see, if I'm shorting something, I like to see things work relatively quickly. And, I'll let things go maybe 2-3% past my buy point, or my short sale point rather, before I'm out, maximum. But generally I like to keep it tighter than that if I'm using a 620. So, like for example, let's look at, if we're looking at a 620 here, let's look at Green Mountain. I thought this was interesting. I watched this thing this morning, and you now see Workday starting to break down. I got a position there, and you can see how immediately it breaks here. So you wanted to be shorting it right at that point, and you're coming down, and now they're pushing it back. Where are we? 133.30. Yeah, they get it back up here a little while ago, but this is starting to come apart. And so you can hit it as long as you don't get something that's telling you, you get a little MACD stretch here, it might be telling you you're getting stretched on the downside, but maybe not. If the market breaks, then it's probably okay and you can stay with it. But one way of handling these sometimes is watch them how they go, they move down sharply along the 6-period line here. And if they start getting above that, then I might be watching it a lot more closely. We're watching Workday come in a little harder now. I think that stock's a clear short on this rally, but we'll see how it pans out. Let's see. No more questions, huh? Would everybody go to sleep on me? Silica Holdings is pretty much done, I think, in terms of coming down, at least in the short term. Solar City, you can see this, big rolling head and shoulders. Here's actually the big pod, sort of cup with handle, and it's breaking. Now this thing looks like it wants to go lower, a lot lower. I think it's heading back to $20. So there's a great article in IBD a couple weeks ago or last week about how there's a lot of fraud going on with these solar panels. People actually lease them. I think they don't really buy them, and of course the solar company tells them that, oh, don't worry, you're going to get you're not going to have to pay anything. The government's going to subsidize it, blah blah blah. And then what happens is they actually what just hit there, Dr. K? Are you doing target practice this morning?
Another alert.
So I think there is a lot of BS in that industry, and I think it's going to implode, and I think Solar City is probably one of the biggest culprits in that sort of thing, and they were talking about. I see them in my neighborhood a lot, but you don't, apparently you lease the solar panels, and I don't know if anybody's actually done that. Somebody says, pandas are sleeping, panthers are waiting. Yeah, that's what we were talking about. You want to be, remember I talked about this a couple of weeks ago, you want to be the proverbial lion in the grass, although somebody likes a panther better. Yeah, I guess panthers are a little cooler looking, especially if you're from Carolina. But just waiting. But I think you're starting to see the market's come in a little bit. I wouldn't be surprised to see this whole thing reverse. It would not surprise me. Like I said, if you don't like what the market's doing right now, just wait 20 minutes, half hour, and it probably changes for you. Let's see, we got 10 minutes left. Somebody says, would you consider shorting CENX here? Would you? You got to rally to the 50-day. If you're using the rules that I talk about, you got to head and shoulders now. You see how you get the V-shaped cup with handle, it fails? So I talked a bit about this, I think, a couple of months ago on this break here, on this failed breakout, and now the little rally bounces. The failed breakout occurs here, and then you bounce down, or you break down to the 50-day moving average here, and then you rally back up to the 20-day moving average. That's a short sale point. That's where I was shorting, and then you broke down through here, and my target actually ultimately was a 200-day, but it was a little bit of a cover here as you tested these lows, and then again you rally into the 20-day here, and you break. So you take your profit. Now you're seeing this thing rally up into the 50-day moving average, and I think in this case, you're approaching a short sale zone. It also coincides with this peak here, so it may go up a little further. But don't ask me if I would consider shorting it. Ask yourself this, and this is how you should evaluate these at all times, and then you don't have to ask me anything. What is the pattern, and where is the stock within its pattern? Well, you can discern, number one, a failed cup with handle, which has now evolved into a head and shoulders. You're rallying up to the peak of the right shoulder and the 10-week line. You're right at the 10-week line. You're just below the 50-day. So what does that tell you? Well, that you're in range of a short sale point. So if you can set a stop, maybe 1% or 2 above the 50-day, that would probably be where you'd want to keep it. Then you could probably come after this turkey right here. So, and I admit I'm watching it, so I'm getting ready to put a position out in this thing myself. So, yes, question: would I consider it? It's on my radar because it's on my short sale list, and it is set up, almost perfectly, I think. So, here, you guys, we can have a little bit of fun here. Let's there's 2,500 filled at 24.78. Let's hit it again. See what happens. Let's see if we can break it here. Another 2,500, 20%. Now they're taking it now. I'm noticing the bids are lining up. So somebody wants this stock right now, but I just put out 5,000 shares, not a big position, and we'll see what happens. Now let's go back. I'm just kind of doing this for fun. You've got the MACD stretch here. You've already crossed, and these are starting to move lower, so it's kind of weak here. And it looks to me like you may very well, this could be the peak of where you're at. I think you're at a low-risk short sale point here if you want to come after it. But, man, that's quite a rally up. Are they expecting the price of oil to go up? Where's oil at right now, Dr. K?
We've been
pushing lows, huh?
Yeah. I mean, we're really testing here. You know, the downtrend isn't going anywhere anytime soon. In other words, it should continue lower. And you know, they're saying that you know, we're at the U.S. oil stockpiles are at the highest level in many, many, many decades.
Yeah. So you know, and this, the Iranians said, the Iranians rather said that they don't have a problem with $24 oil. Now, okay, I think this is kind of instructive. Now you notice I just put out 5,000 CENX at 24. I was filled at 24.7813, and that was a bid, and they took it. So someone there standing there buying it from me as I'm shorting it to them. Now they drifted higher, just a pinch. So there goes my sushi money for today. But you can see that it's pushing a little higher here, and the upside volume is a little bit strong. So I may be turning and covering this pretty quickly if it doesn't give way. So. But it's in a position where you might want to hit it. I think where's the 50-day at here? 25.16 or something like that. So it's not, you know, it's not that high up. So it's still pretty weak, I think. And so this thing could blow apart. But I think you're in a reasonable spot up to the 50-day. Even as high as 26, it could get there. But I don't have a problem putting some out here, and I could go up to 15 or 20,000 on this if I want to. But it trades pretty well. It trades 1,189,000, so it's relatively thick. Somebody says there are mountain lions in the hills around LA, just like in the hills around where I live in San Rafael. That's true. There are rather. Let's see. Short VMW. I'm assuming you're not. Again, here's this kind of question that I think is just kind of dumb. Well, let's look at this. You're way down here. You should have been shorting it here. You know, not down here. So now you want to short it down here. Earnings come out any day. I don't know. It seems a little bit sold out at this point, especially after this big break, and then you just drift down on lighter volume. So why would you want to short it? You know. Yeah. See, you see the CENX pushing 24.93. So when I shorted it, and they took it from me very easily, and I could just smack them, and it's not budging. That's not really what I like to see. So, but this could give out at any point. I've seen it do this before because I've been shorting this, campaigning this on the short side a lot over the last couple of months, and I have a sense of how it works. You'll short it, and there's somebody buying it, but then they go away, and then the thing can drop pretty quickly because it's not a real thick stock. It's a decent trader, but it's not real thick here, so that's really the key for me. Somebody says, I'm seeing more and more 620s breaking. You might be. Let's just look around here. Let's go Twitter. That's not breaking. Let's see Facebook. That's starting to try and break. We see Workday. That's already broken. We see GMCR. That's broken. We've seen FLT. That's starting to come in, but you're not really getting there. Let's go back to CNX. No, UA, that's not really happening. So I do have a little position out here on it, but we'll see what happens. I just don't really see where I can go on the long side. That's really the trick right here. Let's look at data. It's starting to break. Let's look at Splunk. It's already broke. Let's look at Coors, another one. That's starting to look like it might break. Let's look at Google. Still hanging above. You got the MACD stretch coming in after the MACD break here, or crossover here. So kind of looking funky. Let's see. V. That's starting to roll under a little bit. I'm watching the UA now. It's pushing a little past me here. Somebody likes this stock. Let's take a look at Yelp. It's another one. Kind of flattening out here. Looks like it might roll over. Let's see. Netflix. I don't know. Netflix isn't really a short, but it's trying to hang in there. So nothing really happening there yet. Let's see. ARM Holdings. Starting to break there. Rally back above the 20 line, but it hasn't gotten across yet. Let's see. Solar City. That's already broken. So what's the market doing though? Let's take a look at this. Coming in a little bit, but nothing spectacular just yet. So not sure that it's going to break down. I'd watch this though. So anyways, sort of touch and go right now. Let's see. Anything else? Anybody have any specific names? Nope, looks like we're done. So it's 9 o'clock, so I'm pretty much done here. How about you, Dr. K?
Yeah, I think we're good. Just you know, keep your eye in check on all this riptide market action, because it's not an easy environment to be in.
No, not at all. It's very difficult. And you can see, you know, testing some short positions. I'm not really getting any traction here. So Workday's working out. UA's kind of pushing past. CNX, nothing really happening there, and the market's kind of choppy and sloppy. So it's very difficult. Someone once asked about TNET. I don't know. You try to break out, pull back to the 20-day. I can't tell you anything here. So. Anyways, that's all we got, you guys. Thanks for showing up. We will catch you next time. Take care.
So long, everyone.